Hello and welcome everyone. Today in this video, we will first cover the gold technical analysis on the 1-hour chart, where I'll explain the current trend, market structure, key resistance and support levels, and what to expect in gold from 2nd to 7th January. So let's jump straight into the chart and break everything down step by step. 1-hour market structure, Dow theory. On the 1-hour time frame, gold is still trading in a clear downtrend. According to Dow theory, a downtrend is confirmed when the market continues to print lower highs, lower lows. And that is exactly what gold has been doing. After reaching the top, we saw institutional profit booking begin. Large players started locking in profits near the highs, and because this move happened around year-end, liquidity conditions amplified the selling pressure. That is why the sell-off from the top was sharp and aggressive. Since that high, price has failed to reclaim previous highs and continues to form lower highs and lower lows, confirming that the short-term trend on the 1-hour chart remains bearish. As long as this structure holds, we must respect the downside pressure. Why the sell-off happened? This sell-off is not random. At the highs, institutions completed profit booking, reduced exposure into year-end, and rebalanced positions for the new year. When liquidity is thinner, these flows create fast directional moves, which is exactly what we saw on gold. So the bearish structure we are seeing now is a reaction to distribution at the top, not a surprise. Bullish divergence, early reversal signal. Now, even though the trend is still bearish, there is one very important technical clue on the chart. We have a clear bullish divergence on the 1-hour time frame. Price is making lower lows, but momentum is not confirming those lows. This tells us that sellers are losing strength and downside momentum is weakening. However, this is extremely important to understand. Bullish divergence is not a buy signal by itself. It is an early warning, not confirmation. It tells us to stop selling aggressively and start preparing for a possible trend shift, but only after confirmation. Key reversal level, 4,400 zone. To properly trade this bullish divergence, we need a clear structural break. The most important level on the chart right now is the 4,400 zone. This level represents previous lower high, strong resistance, a key psychological level. If price breaks and closes above 4,400, and more importantly, if we get a strong 4-hour candle close above this zone, then the downtrend will be invalidated. At that point, the previous lower high will be broken, market structure will shift, price will likely print a new higher high. We can then consider buy trades toward the upside. So 4,400 is the key level for trend reversal. Until price closes above this zone, buying remains risky. Bearish continuation scenario, 4,260 and 4,200. Since the current trend is still bearish, further downside is still possible. The most important support level to watch is 4,260. If price breaks and closes below 4,260, it confirms continuation of the downtrend. In that case, the next major downside target becomes the 4,200 zone, which is a strong psychological level, a previous demand area, a likely reaction zone for buyers. So, from a bearish perspective, below 4,260, selling pressure increases. 4,200, next price stop. Current market conditions, low volatility. One more important thing to note. Today, there are no major news events, which means we can expect low volatility, slow price action, possible consolidation until Monday. This makes technical levels even more important because price will likely respect structure rather than react to news-driven volatility. Right now, 4,400 is the immediate resistance, 4,260 is the key downside level. Trade expectation and discipline. So the correct approach here is patience. Do not buy just because price looks cheap. Do not sell blindly after a big move. Let the market confirm direction. 4H close above 4400, trend reversal, buy setups valid. Bearish case, break and close below 4260, continuation, target 4200. Trade what you see, not what you hope. To summarize, gold is in a 1-hour downtrend. Structure shows lower highs and lower lows. Institutional profit booking caused the sell-off. Bullish divergence is present but not confirmed. 4400 equals key reversal level, needs 4H close. 4260 equals breakdown level. 4200 equals next downside target. Low volatility expected until Monday. If you want to learn technical and fundamental analysis properly and understand how professionals read market structure and manage risk, you can message me directly on Twitter for one-on-one mentorship and training. If this analysis helped you, make sure to like the video, subscribe to the channel, and comment below with your gold outlook for this week. Thanks for watching. Trade safe, and I'll see you in the next market update.